Welcome back to WealthWise, where we dive deep into the financial world without ever showing our faces. Today we're talking about Wall Street, its wild past, its volatile present, and its uncertain future. So grab your popcorn, because it's about to get interesting. Let's rewind the clock to the 1600s. Imagine this: Dutch settlers in what we now call New York City, chilling under a buttonwood tree, trading goods like beaver pelts and tobacco. This casual marketplace set the stage for what would become the epicenter of global finance. Fast forward to 1792 and a bunch of guys in wigs and stockings signed the Buttonwood Agreement, creating the New York Stock Exchange. The deal? No trading fees over 25 cents. Those were the days. And no, they didn't have Reddit back then to pump their favorite stonk. Wall Street then goes through its teenage years, the Gilded Age. Think Rockefeller, Carnegie, and JP Morgan, basically the Avengers of finance. By the way, fun fact: JP Morgan once bailed out the US Treasury. I guess when you're richer than the government, you become the government. These industrial tycoons amassed unimaginable wealth, shaping the American economy and infrastructure. Rockefeller's Standard Oil controlled about 90% of US oil, while Carnegie Steel revolutionized the steel industry. These guys didn't just play Monopoly, they practically invented it. Now let's talk about the 1929 crash. People were buying stocks like they were Beanie Babies in the 90s. Then kaboom, Black Tuesday hits, and the market loses 12% in a single day. Cue the Great Depression. It was a time of breadlines and Hoovervilles. Basically homeless camps named after President Hoover, who everyone blamed for the mess. The economy finally started to recover with World War II, but not before a lot of lessons were learned about speculation and regulation. The Great Depression saw a third of American banks fail, and unemployment soar to 25%. Families were selling apples on street corners just to survive. The government stepped in with the New Deal, a series of programs and reforms, including the creation of the Securities and Exchange Commission, SEC, to regulate the stock market and prevent future crashes. Jump to the 80s and 90s, it's the era of shoulder pads and Gordon Gekko. Greed is good, right? The tech boom happens, and suddenly everyone's talking about the internet like it's the next big thing, which, spoiler alert, it was. Then, the dot-com bubble bursts in 2000, proving once again that what goes up must come down. Remember pets.com? Yeah, neither do we. The 90s also saw the rise of day trading, with individual investors taking advantage of online platforms to trade stocks. This era brought unprecedented access to the stock market, but it also led to some spectacular failures. Companies like Pets.com and Webvan, which had shaky business models, went public and then quickly went under when the bubble burst. Then came 2008, the financial equivalent of the purge. Banks were handing out subprime mortgages like candy on Halloween. When the housing bubble burst, it triggered the worst financial crisis since the Great Depression. Lehman Brothers collapsed, and suddenly everyone knew what a credit default swap was. Fun times. Lehman's bankruptcy was the largest in US history, and it sent shockwaves through the global economy. The crisis led to a $700 billion bailout package from the US government and new regulations like the Dodd-Frank Act, aimed at preventing future meltdowns. It was a harsh reminder of the risks inherent in the financial system. So, where are we now? Wall Street has embraced technology with high-frequency trading, and new players like Robinhood have gamified investing. Meanwhile, Reddit traders are taking on hedge funds in an epic David versus Goliath battle. Remember GameStop? Crypto is another big player, with Bitcoin becoming the digital gold of our era. As for the future, expect more volatility, more innovation, and probably more memes. Because if there's one thing we've learned, it's that Wall Street never sleeps, and neither does Twitter. Today, the financial landscape is more diverse than ever. Fintech companies are disrupting traditional banking, and platforms like Robinhood have democratized trading, making it accessible to millions of people. Crypto assets, despite their volatility, are being increasingly adopted, with institutions like Tesla and PayPal getting involved. Looking ahead, the future of Wall Street will likely be shaped by artificial intelligence, blockchain technology, and increased regulation to curb excesses. But one thing's for sure, there will always be opportunities and risks. So, stay informed, stay savvy, and never stop learning. Thanks for watching WealthWise. Don't forget to like, subscribe, and hit that notification bell so you never miss our latest videos. And remember, always do your research before diving into the stock market, or you might end up like pets.com. Stay savvy, and see you next time.